Dan, I got to put you on the spot. Everybody's listening to hear what you have to say. Give us your top picks in tech at this point, not what's going to work 10 years from now. I mean, for people that are buying, looking for opportunities over the next year or so, I want to point something else out. This is from Bespoke. So obviously yesterday, one of the worst days for the stock market in years. The NASDAQ, it's fallen a similar amount over the last 13 trading days than it did in the first 13 trading days of COVID, just to kind of put that in perspective. What are your top picks? What would you buy on the dip right now?
I think there's 5 names here that I buy in terms of the names that I view as just table pounders relative to where I see it 6-12 months now. It's NVIDIA, it's Apple, it's Microsoft, it's Tesla, it's Palantir. To me, those are the 5 names, the way that they've sold off, that I continue to view as sort of the names that I would own over these next 3-6 months. Right here, right now.
Okay. When we're talking NVIDIA and Tesla, hands off right now. I know you're one of the biggest bulls in NVIDIA we've ever seen. You've been you cover Tesla as part of your EV coverage. Is it just hands off right now? Too much volatility?
I mean, look. I've always viewed it, and anyone that's followed me for decades, like in the chaos creates opportunities. When I look at NVIDIA, you're talking about there's only one chip fueling the AI revolution. This will be, I believe, all-time highs for NVIDIA will happen in 2025, despite what we're seeing. For Tesla, it's navigating this moment. We're at 6 times we've had 50% sell-offs. Every time that's been the opportunity.
I know it's like 8:30 in the AI party. I think the cops may have shown up.
Welcome to today's deep dive into Palantir. In this video, you'll learn why, despite market turbulence and short-term dips, Palantir remains a compelling buy for those willing to think long-term. Stick with us as we connect expert insights, data-driven growth projections, and the market context behind these bold claims. In an illuminating interview, Dan Ives listed his top picks for immediate investment opportunities. Among the 5 names he champions, NVIDIA, Apple, Microsoft, Tesla, and Palantir, Palantir stands out as a strong candidate for investors seeking short-term gains over the next 3 to 6 months. This analyst strategy is based on seizing opportunities during market dips. He noted that despite the current market volatility, marked by the NASDAQ experiencing one of its worst days in years, comparable to the initial 13 trading days of COVID, these names have shown resilience. For him, Palantir is not just another tech stock. It is part of a select group of table pounders that are expected to outperform over the next 6 to 12 months. The emphasis on buying on the dip is a central theme here. This approach resonates with many investors who view temporary setbacks in the market as openings to enter positions at more attractive prices. The analyst's candid assessment, spoken live and in front of an attentive audience, reinforces the idea that even in turbulent times, established tech giants like Palantir can offer significant upside potential. Imagine being in the audience during that interview. He puts the pressure on himself to provide his best picks, and among his recommendations, Palantir clearly earns its place. This isn't just speculative chatter. It's a carefully considered suggestion rooted in market dynamics and historical performance under stress. Turning our attention to the long-term forecast, Jake Lurch at The Motley Fool presents a bold prediction. Palantir Technologies could surge by an astonishing 1,345% over the next 10 years. The article begins by noting that Palantir's stock has dropped more than 35% from its all-time high, a decline that should not spur panic, but rather present an opportunity. The author explains that, based on current market capitalization figures, approximately $186 billion, a 1,345% gain would elevate Palantir's market cap to roughly $2.5 trillion. To put this into perspective, only a handful of American companies, Apple, Microsoft, and NVIDIA, are already above that threshold. What makes this forecast even more compelling is the data on Palantir's growth metrics. In its most recent quarter ending December 31st, 2024, Palantir posted a remarkable 36% revenue growth. Simultaneously, its customer base expanded by 43% year over year, with an impressive 13% increase over just 90 business days. These figures suggest that Palantir is rapidly transitioning from its early reliance on government contracts, primarily defense and intelligence, to a burgeoning commercial market where businesses are eager to leverage its AI platform for boosting sales, enhancing customer satisfaction, and cutting costs. How would a company with such explosive growth metrics transform the tech landscape in the coming decade. The article positions Palantir not only as a resilient player in the face of current market dips, but also as a future technology titan with the potential to reshape industry standards. Every statistic here, from the dramatic revenue uptick to the rapid customer growth, serves to underline the long-term buy-and-hold case. Even though the stock is volatile, the pullback is seen as a natural and even welcome part of the investment cycle, inviting patient investors to capitalize on its underpriced value before the anticipated surge. Now let's shift our focus to the perspective of Wedbush analyst Dan Ives again, who remains unwaveringly bullish on Palantir. Despite a notable decline in its value over the past month, Ives has doubled down on his conviction. He describes Palantir as one of the top names to own in 2025, a stance that contrasts with the cooling enthusiasm seen elsewhere in the market. Ives's assessment is grounded in his long track record of accurate predictions. He recalls a time when Palantir was trading above $125 with a staggering price-to-earnings ratio of over 600, reflecting the market's once astronomical expectations. However, as market sentiment has shifted, with proposed defense budget cuts dampening bullish fervor, some have stepped back. Yet Ives stands firm, maintaining an outperform rating and setting a price target of $120, which implies a potential upside of roughly 42% from current levels. Perhaps the most striking part of Ives' commentary is his reference to Palantir as the Messi of AI. This analogy underscores his belief in the company's ability to dominate its field, much like the famed soccer star in his sport. Ives even ventures further, suggesting that Palantir could be worth over $1 trillion in the next 3 to 5 years. Notably, he reflects on his previous bullish case, where he had envisioned a target of $50 for 2025. And now, with the stock well above that mark, his continued confidence carries extra weight. Ives' stance invites viewers to reconsider their assessments of Palantir, especially given his history of prescient calls. For investors, these insights together form a roadmap that balances risk and reward. The current dip, marked by broader market instability, should be viewed not as a deterrent, but as an invitation to buy quality at a discount. The long-term growth prospects, underpinned by impressive revenue and customer gains, make Palantir a strong candidate for portfolios that can endure short-term fluctuations. In conclusion, whether you are a seasoned investor or new to the market, the lessons here are clear. Recognize the opportunities hidden in market volatility, trust in data-backed growth, and heed the insights of experts who see beyond today's numbers. In summary, we've explored why Palantir is a standout investment from 3 different angles: its near-term resilience, its explosive long-term growth potential, and the unwavering confidence of top analysts. If you found these insights valuable, be sure to subscribe to the channel and like this video for more in-depth market analysis and expert breakdowns. Thank you for watching, and stay tuned for our next deep dive.